On this video, I'm going to speak about selling a financial advisory practice. How much can you make from selling that particular practice? I'm going to focus on the offshore market now and not the onshore UK market or onshore US market. When it comes to selling a financial advisory practice in the offshore market, there's two ways of valuing companies. One is recurrent revenue, and that's quite simple. If nothing was to happen, how much would you make from that book of business? So for example, let's say you've got an advisor with 50 million and they've got a 1% yield, that's $500,000 a year, or pounds or whatever. Usually a recurring of 2 times will be the norm. So if you've got a financial advisor with 50 million, 1% yield, 500,000 a year, that will be a $1 million business. However, some people don't have a lot of management fees. So in that case, an advisory company might actually base it on assets or total assets, a percentage of total assets. So let's say you have somebody who has, again, 50 million as an example. They don't have a 1% yield, but what they do have is decent assets. It could still be the case that you'll be offered that $1 million in certain circumstances, because the buyer, and I bought 1 or 2 advisors out, the buyer's always thinking, how can I recoup their money? Which brings me though to another point. If you've got 50 million, but most of that 50 million is in high risk assets and the liquid assets, that book is not going to be worth even close to 50 million. And this $1 million. And this comes back to a fallacy I've often seen with people who are selling their business. A lot of people who sell their business, they have valuation ideas which are just too unrealistic. They think that basically, oh, because I've made X and Y money, then my business is worth that much. So they'll think, oh, last year I made $700,000 as a pure example. Why would I sell out for $1 million? Because that's only 1.3 years worth of my income. But you can't value a business like that, right? Because going back to that example, if someone made $700,000, then basically that is also based on their blood, sweat and tears. It's not based on recurrent revenue. So you can't base a business just on that kind of thing. And a very good idea, or a very good question should I say, to ascertain how realistic somebody is about selling their business, is to ask them, okay, well, what are you basing it on? What are you basing your valuation on? Usually people don't know the answer to that question. They don't know at all. Some people might come and say, oh, EBITDA or something. But most people who have unrealistic valuation expectations don't know what they're basing their business on and the valuation on. But if you're looking to sell out of your business, we are interested in acquiring businesses overseas, so get in contact with me below, especially if you've got a realistic valuation for your business.